Hi there, welcome back. In this video, I'm talking about sales tax. When do you need to pay sales tax? And especially when do you need to pay sales tax in other states? And therefore, we'll also be talking about online businesses. If you're selling courses, coaching, or anything like that in other states. If you have an in-person business, we'll be covering all of that as well as we go through the basics, because we really need to cover it all in order to explain it. Okay, so first, what is a sales tax? Sales tax means that the state is taxing the sale. They have the right to tax the sale. So in general, this doesn't cost you anything as the business owner. You're just going to add a percentage onto the sale, and then you keep that amount of money. It's not income, it's a liability because you owe it to the state. This is called a consumption tax because it's based on your consumption of goods and services is how much tax you're going to pay. So if you spend less on things, you pay less sales tax. Now, when you're on a state website, you might see the term sales and use tax. The use tax is in regards to the fact that you might go buy something in another state that you're going to use in the state you live in, and so you should self-report and pay tax on that. Now, the rules have been changing the past few years, so this is going to be slightly less relevant. And obviously that's historically been really difficult to track and is just based on self-reporting. Okay, so sales tax was traditionally focused on product sales. However, many states have expanded their rules into services or portions of services or portions of products. And more recently, we've had the online world of courses and memberships and coaching. And so a lot of the terminology at the state level doesn't really address online types of products and services at all. So there are two tests that we're going to use to determine what state you have to pay sales tax in. And once you meet the qualifications for either of these tests, it means that you have nexus in that state, which means the state has the right to tax you. Sales tax. Now, once you have nexus, you do need to register with the state for sales tax. However, some of what your business sells might not be taxed. And so you still file returns showing your sales in that state minus what's called your exemptions. So your exemptions might be areas of what you sell that just aren't taxed. So a few of these common distinctions when you're looking at sales tax rules would be products or services. Direct to consumer, meaning you're selling to people that are then using whatever you're selling, versus wholesale. So wholesale normally isn't taxed because they don't want to do double tax. Wholesale would be you're buying to resell, right? But some states do tax at a lower rate. And then there's ready to eat food versus for home consumption food, packaged to take home, intended to be eaten at home. And then, like I said before, there can be luxury goods. So meaning, eating out might be considered more of a luxury that some states might tax, whereas they're not taxing food that you take for home consumption. Now, every state has its own rules. So these variations, it can really vary from state to state. Okay, so like I said, the first thing is we have to determine, do you have nexus in a state? So the first test is called the physical nexus. And you get physical nexus if you work in a state. And this, especially with like online businesses, if you're working in the state, then you have nexus in that state. But you can also get nexus by having a store, operating your business, providing a service, having a warehouse that holds your products, or inventory, or an employee. So any of those things in a state generally is going to give the state physical nexus. Now, they do all have their own rules, but that's a pretty standard way to think about it in nearly every state. Now, the second test is the one that's changed a lot over the past few years, and it's economic nexus. And so basically, most states have a requirement that you meet a certain threshold of sales or number of transactions, with many states being 100,000 in sales or 200 transactions. And so once you meet that threshold, then you have economic nexus. Some states have just one requirement and some states have both requirements. So your starting point is, where do you have physical nexus? Where are you working? If you have a really small business, it might just be you working at a computer, especially if it's an online business. So where are you located? That's the state where you're going to need to do sales tax for your customers that live in that state. So in general, with products and now with online stuff, it's destination based. It's where is your customer located? Now, some states up until recently did have some caveats on this, but in general, this is a pretty reliable way to think about it now. Then for your other states, every other state that you're not having a physical nexus in, you'll just look at the economic nexus. And as long as you're below that economic nexus, you don't need to collect or pay sales tax in those states. And that's really a good thing, because this could get really cumbersome. And if you're a small business and you only make, 50, 60,000 a year online, but your sales are from like 40 states, this would be way too time consuming. So these rules have been a really great addition. There's also what's called reseller rules. So if you're selling products through a reseller, such as Amazon or Etsy, where they're actually the ones taking payment, they're now required to handle sales tax for you. And in general, you want to think about sales tax as wherever your customer is located. The address that they put in when they pay, that's the information that you have to know how you need to tax them. So most online payment processors like Stripe or Square, or your software system, if you use another type of software system like Squarespace or Kartra, they'll allow you to decide what states you want to pay tax. You want sales tax to be charged in for customers, and then that will happen automatically. Now, in some other videos, I'm going to go over softwares and different softwares that you can use to do this. And fortunately, you should have some time if you're a small business, to kind of ramp up and have more sales before you're required to take this on in more states than the state you're in, right? So whatever state you're in, you're going to need to charge sales tax generally to customers in that state. Now, we have a resource you can check out on my website that goes over rules in each state for physical and economic nexus. But then you will need to take a closer look for local rates, because although the state might have a sales tax rate, then there can be little surcharges for different localities. And then when you're looking at the other states and the rates is where you'll get into the details of what you're providing. Okay, let me know if you have any questions in the comments down below. Check out that resource on my website. And if you're new here, consider subscribing. And if you are looking to organize your accounting and taxes, check out my Master Your Accounting and Taxes program and my unique auto accounting spreadsheet templates that help you pay taxes as you earn and track everything in your business with the training you need to learn how to have separate business accounting records and to keep your finances separate from your business. Plus, that program includes how to save taxes, tax saving strategies with things like the S Corp, and how to get all the write-offs you deserve. So be sure to check it out if you want more information on that. And otherwise, I hope to see you in the next video. Bye.